Good morning. All right. Okay. So we're getting closer to what should be pretty stiff resistance, and considering this many days up, momentum stalled yesterday. Right. You just see the distance in the range, the narrowing distance in the range as it comes into this area, and it came back yesterday. That was a pretty good drop, and kind of held there for a while, and buyers regained confidence and stepped it up in the afternoon. So where are we at now? And gapping slightly above this area. So into the resistance, continuing to move higher. Was a little bit higher there. But the closer you get to a pivot and there's overlapping bars here, technical analysis 101. There were buyers up here. That's supply. Now we don't know how much supply. You could look and see if there was volume here and trying to figure that out, if there was a lot of volume up there or not. But I think that's kind of mental masturbation, trying to figure out what's going to happen. As long as it doesn't violate a prior bar's low as a minimum, you assume that it's going to continue to push up. And you just know that risk is rising as you get closer to a point where it turned from. Now you see the depth of the move down, and just okay. A lot of supply came out as the bullishness up here, it began to break and then retest. It went down further, and then it come all the way back up again. So this was bad. This is good, and now we're getting more neutral. And you see, this is where this area, not that wide of an area, but give or take, this area has been where the markets have run into sellers for a year already. And we already covered the VIX, just to look at it. It's down here by the lows where it's turned up, each time. 2002 was a big decline, and now we're in a trading range. Potentially, it's built up a nice base where the next decline, when it begins to come, will hold the prior low around 3,800 and ideally decently above it. Go back here. So on the weekly chart, just the middle of the range now, the 20 MA, which is like the 100 MA on the daily, is around 400. So even ideally, it pushes up a little bit further into here, so it has more room to pull back without doing any damage. We know it's going to pull back because that's just the way things are. So as it comes up here, at some point, it's going to start to pull back. And when you see something that's, in this case, in a sideways trend, ideally, you want to see it get to the top of the range. Maybe even it could make a peekaboo above the range, right? That often happens. And so it has a more distance to where the support is. And it's the same thing with something that's in an uptrend. You want to see it exceed a prior high by a decent distance so that when it pulls back, it doesn't have to pull back to what we call major support. So on the hourly chart here, yesterday, there was a wide range bar, a range expansion bar that failed. And it didn't close under the low, but hey, it went underneath it. And then it just went sideways for a while, built up pivots on the 5-minute chart, and rallied back up again. So this was obviously a concern, created uncertainty, and things just sat there for 3 hours. My point is that if something exceeds resistance, this took it out by a very nice amount, so it could pull back without violating the trend. Anything that pulls back to the low prior to the higher high is a deep retracement by definition and puts the trend in question. So we'll see if it can hold as it goes up into this area. Can it hold yesterday's low? And as long as it does that, And ideally, it doesn't close deeply into this bar. By the end of the day, we assume that it'll keep going up until it violates a prior day's low. Pretty simple. Okay. So futures are pushing up to the top of the range. And as you look at this, well, you can see it moving. When I looked at spiders, it didn't look like it was that close to the top of the range. So futures appear to be leading, right? Let me go back and look at spiders and see where they're at, because they weren't that far up. I'm pulling back here a little bit. They're kind of right in the middle of that bar. That's why I look at the spiders and look at the futures and then go to SPX. Middle of that bar there. And this is, a 24-hour chart. So the bars don't look exactly the same. But futures are getting close to the pivot. And as it gets up there, there's just going to be natural buyers up there. They just sell longs and put on shorts, which stops above 4,200, and to see if they can hang on there, and maybe it begins to roll over down toward 4,100. So again, prior day's low, right? Support, and you can see the congestion there on the hourly chart. And then if more selling does develop into the coming days, this area here, what was resistance, should become support. These pivot. So pullbacks into here. And as it pulls back, well, because of the decline here, the 20 MA is under the 50, but the 20 will start to rise as it drops off this old data here, right? This will start to rise up, and it should get up above the 50 MA. Right? Simple moving average, right? Take the current information, drop off the old information from 20 days ago, right? Add it to the line, and it'll move up. All right, so SPX. Didn't move these lines around today. So average range is still around 40 points. And all in that, doesn't have to be exact. So if we could get above there, that would be ideal, right? Above that pivot would be great. And I've got 4170. Jake's only giving me the lower end of, right, 4090. So we look at where they believe is sufficient premium to do a credit spread, and then see where that puts us. So 4090 down here. The prices are here, right? We looked at SPY. It's in the middle of that bar right there. And 4090 down here. It's below yesterday's low. I wouldn't call it a no-brainer. So this is our starting point, right? Of, like, I look at the average ranges and say, okay, and it's opening up here to say, oh, if it came all the way down there, that's kind of one measure of saying we won't get hit, right? Normal days. He's telling me 4060 by 65, 5 wide. Okay, that's 55 cents. I like that. Thank you, Jake. So 4060 by 65, 5 wide. Usually we go wider than that, but for 55 cents, that's worth doing. Right? It's down below here, down toward this wide range bar there. So when we look at these charts and say, okay, what's the probability here? What are the probabilities? Well, holding above yesterday's low is one thing that we'd like to see. But, it's over here. Could it break yesterday's low? Sure, it could do that. So that's a little close. But to come, down here, I look at that and say, well, that's not going to happen today unless some terrible news comes out, and that's the unknown. We can't, make a plan based on what no one can know. All right. And so up here, to get up above here to 4170. I like that. I don't think it's getting up there today. First of all, the momentum could pick up again, push up there. But, everything's about probabilities and beliefs. So up there, what Jake suggested, 4090, 4065, 25 wide. Yep. All right. So, slowing momentum yesterday, narrow bodied bar. And we saw multiple, what we call 1, 2, 3 patterns on stocks that are maybe playing catch up. So this is not a 1, 2, 3 for a textbook, even though it's a wide range bar, an inside bar, because it's three bars up. You want to see a 1, 2, 3 being like something like this, these 2 bars there. And you might say, well, Greg, it's not an inside bar. And I'm like, yeah, okay, big deal. It's not the textbook thing, but it's good enough for government work. And it dipped down and came back up. The body's in the top part here, but that's an igniting bar. All right. And so taking out that bar, it should go up. So could this continue? Yeah, it's already being rejected a little bit. We can see if it hangs up there or how much it comes in or not, but that's getting close to what's to the left also. Still got room, right? Does it break a prior day's low? That's our first reference point of support. Prior day's low. There's the pivot. Exceeded this, pretty whippy and erratic. It was the underperformer. Momentum slowed. It's at the 200 MA. So various reasons for the momentum to slow there. Again, slowing momentum, coming into resistance. Had a heck of a run. Amazing comeback from that wide range red bar there on the weekly chart and coming on into that resistance area there. And it's extended. There's not like there's that significant amount of resistance, and we can crunch this up, or I can put it on a 90-minute chart just to condense the data. Let's put it on a 180-minute chart. And that's the point that I want to make, is that, looking at this little area right here, there isn't much there. And the way this came down, there isn't a lot of resistance here. So it's stalling, but it hasn't violated a prior day's low yet. Hasn't even, as of yet, retraced deeply into a prior day. Maybe today will be that day. But so far, we have a saying, extended can become more extended. So until it can, at a minimum, close deeply into the prior day's range on a closing basis, or even worse, close below it, assume it's going to go up, from this time frame. All right, what are interest rates doing? 13-week. Whoa, what's going on there? Why did that jump up like that? I don't know if there's any news, but it flies in the face of the Fed isn't going to do anything. Maybe there's something going on. I was surprised to click that and find out that it jumped that high. It's a 13-week Treasury bill. Let's see what the 5-year, that's not doing anything. It's up a little bit. And the 10-year up a little bit. It is on some support. So just chopping sideways here, on the edge. We'll keep an eye on it, set alerts, and here a little bit. Mentioned last week that the 30-year yield got above the 10. So that is an inverted. You can see the 5 here. and the 10 are inverted. And of course, the 3-month is the highest. So a little bit of improvement. GBT, gapping up a little bit. Nothing of significance going on here. I don't know these dots here, but looks like the dollar is moving up. Let's see what the euro is doing. It should be moving down. So with the markets at resistance, and what has the market not liked in the past? Interest rates going up and the dollar going up. And so this isn't a big deal yet, but look, the euro is at this pivot high and it's being rejected. So as we look at different information that would suggest a potential turning point in the market, we look for other information that would confirm that. And so if the dollar starts going up and interest rates start going up, VIX is at support, more things start to line up where the market would have a short-term correction. Well, the pound ain't backing off. That's going up. But it is these pivot highs also, multiple pivot highs. All right. So eventually we have to see, as far as the market goes, like I said, some kind of retracement on a closing basis into a prior day's range or on a closing basis. And Bitcoin continues to consolidate. That's bullish, not going down yet. Transports had a resting day yesterday. So depending on where you look at tech stocks, you say, well, everything is fantastic. They made a bottom, they cleared the prior pivot high. The next resistance is up here. And now we'll see how things develop. Starting to pull back a little bit. They were higher and now they're just on top of yesterday's range. So, yesterday morning we were looking for a slowing momentum kind of a day, consolidation day. We got it. And maybe today's going to be another one. We'll see how it plays out. All yours, Dan.
Good morning. I've been calling it musical chairs. It's bullish as can be. Like, just be prepared when the music stops, and which intraday did happen yesterday. And we didn't panic. We just went tighten up stops, sold a little more in the screens. But now, well, it's a control pullback here from the nice gap up. I won't repeat what Greg said. You got it there. But we are gapping up from what we call an end of day rally. Look at the spiders here, rally for 2 hours into the close. That's where it should hold, but this pullback to support would be 10 times better if it was an end of day base. So this has the potential to bounce a little and fail and make a lower low. Pfizer I posted already over yesterday's high. We were talking about it yesterday, but I was waiting just overnight, make sure that's follow through. AEM 1, 2, 3 would be better. I was looking at NEM yesterday. I like NEM better, Thomas. The A/B test, as I call it all the time, comparing two things, which one's better. This one has a bottoming tail, and it's deeper into this resistance with a beautiful weekly and a price void. So this one I definitely like better. In fact, I'm going to put it in a window. Let's see what I have on my big interest here. I don't have any earnings stocks. There was a number of wide range bars yesterday, Thomas. So you just we can talk in the green room, but just tell me what you're thinking stock trade, day trade, put spread. LMT was another one Greg mentioned yesterday. Look at this monthly. That is bullish. 6-month consolidation inside this wide range igniting breakout. That's amazing monthly right there. Yeah, but a lot of them, Thomas, had ludicrous spreads. So I'll let you go check them out first. This was one earnings right here, AYI. That is a sell setup at the 20, gapping down. Starting to be in excess. Yeah, I mean, that's gapping down $9. When I saw it this morning at 178, I was thinking, fine, target would be somewhere in here. So that one's moved too much. Home builders have started rocking on Friday. And I have a whole list of home builders in here that I'm watching for 1, 2, 3s. Pulte was the best looking one to me yesterday. And as you can see, that's not at 1, 2, 3 because it's not an inside bar. Let's just jump over here. I got a whole list of miscellaneous things. KC. Look at this. That's a nice bearish pre-market consolidation. This is a beautiful day trade short idea. Gapping down from a climactic sell setup. I'll put that in this bottom right. NCLH. Yeah, I was talking about that whole sector bottoming. Jets were sell setups, but big move. I was looking at a couple hotels. Our sell setups. AMD, no pattern yet, but daily, weekly, monthly look great. So we got it's horrible timing entering AMD with the sector and the market up so much. So that this ideally will chop around for a couple, 3, 4, 5 days. I just saw this thing on the ticker this morning, recent IPO. And then, wow, look at the pre-market blast. Wow. Gapping up to all-time highs, so nothing to do with that. I just had an alarm go off here on SSNC. This is a little 1, 2, 3 with a price void. Let me put this in a window. Let's see, we're finding plenty of new trade ideas because they're new independent bullish setups. We're not trading the Qs or spiders, diamonds that are up so much. In fact, we talked about it last MT Live, IWM. I mean, relative strength weakness, that even though this is the weakest one, this one to me has the best opportunity to play catch up because of this big old void. And it's kind of a sloppy inverse head and shoulders, but ideally I want it to go sideways a little bit. Yeah, Alex, I posted that one already. The gap up here. So it's a long idea. It's just, we got to watch it and get an intraday setup, but I also posted it as a put spread for next week, the 105.95. I just started off by saying 30-minute high, and that just gives me time to monitor it with subscribers not jumping in at the market open. But yeah, I definitely might get a more aggressive entry if it holds. This thing was a 1, 2, 3 in a downtrend, but it was such a potent bar on volume that I might have said, hey, it could be the start of a bottom. We don't know yet. But now, wow, look at that gap to 230. And we're going to be on tomorrow's MT Live is on volume. And so, this volume it's an attention grabber. Pay attention to price. Also look at these volumes. The AI sector was moving the last 2 days. BBAI, look at all this volume here. This one, I'm mad I didn't post because we were talking about it being a 1, 2, 3 yesterday morning. You can see that it was an inside bar. And I even told Greg, if I don't post it, that means it's gonna go without us. And that's exactly what it did. I want to be mentioned now. Yeah, it's popping pre-market. I have that in my minder. Are we in this? No, I gave this on Friday, and I don't know if it ever got filled. But yeah, let's put it back on the new watch list. Well, I'm running out of little windows here, even though I have 6 screens. But yeah, that's fantastic. Closing breakout 1, 2, 3. Serious accounting issues. Fictional accounting. So Caring's, or I mean Austin. All right, can you come back to that later? I want to kind of look into that more, but I don't want to do it now. And we actually have a covered call on this, but the 28th, you know, if that's, we sent a letter. Oh, okay, so it's whoever Caringsdale is. It's not Otters, and it's, I don't know. I want to come back to it. I don't want to waste time, but yes, I want to talk about it. Here's another IPO that ripped the last 2 days. Let's keep an eye on that. I don't even know what it does. IYR. You know, I was watching that Sternlicht guy on CNBC, big real estate fund mogul, and he always has very interesting things to say, in my opinion. And he was saying these regional banks, there's no way, you know, they're out of the woods, and they are going to have real estate problems because they're not mark to market, and you know, et cetera, and the value's obviously going down on real estate with rates going up. So I actually mentioned to Greg, this, you know, yesterday's low, I know it's a bullish weekly, but it could be the start of a home run short. All right, Pfizer's triggering. I had a HIMSS alarm for some reason. Oh, because we're in that from yesterday. Spot. No. Oh, on the put spread. Okay, yeah. On the directional JAS, I in the morning I said don't buy a breakout unless it happens after 3 p.m. and I didn't report it. But if you are telling me it's not filled, I'm going to delete it right now. Because yeah, I did this morning. I went ahead and posted that as open when I noticed that it triggered. W whiskey up alarm. We entered this both as a directional and a put spread yesterday. So I'll adjust these alarms. Roku I posted. Roku I gave as a half lot core long. I've been watching, you know, Greg, you laugh at me when I say I've been watching something for a month. I have been watching Roku for a month for an entry. Daily, weekly, monthly. It is beautiful alignment. Globe here, I texted. Yeah, I need your help. I'm like a, you know, the market open is my busiest time. So yeah, if you can tell me. No, I know, that's why I said half lot, for that very reason. I know, I said only do a half for that very reason. Dash up alarm, and it's a big old stop, so it's the same thing. Our dash is doing better. Well, it was doing fine, but it's doing even more better. 59.54. All right, it's very spready dash. So let's try to get out into strength here. Oh, it did? Okay, see, awesome. That's where, I need your help. So thanks. All right, see, wow, the IWM just took a big dump on the 5-minute chart. And remember I said because of the end of day decline, that I think this first attempted bounce is going to fail. And that's exactly what's happening right now. Delta 20 is asking about J and J. Yeah, we entered that yesterday over Friday's high. So you're chasing right now as a swing trade, but day trade, it's holding strong. Yeah, Abbott, you should just be in trail mode. Yeah, I remember we were talking about that on Thursday, that setup. All right, so dash, let's get out into weakness. I mean, into strength, dash. J and J up alarm. We were just talking about it. Let me fix some of these alerts. Yeah, 15-minute looks fantastic. Banking KRE, I was telling Greg, as the obvious. But look at this thing, relative weakness just supports the whole scenario of these regional banks. I don't think the problems are over. All right, J&J, we're in at 155.20. So we are already up $2.30. It's right at the 50. Let's go ahead and sell a third and move stop break even. Or you can, figure out your own trail because it's a very bullish 15-minute chart.